Hi, good morning, everyone. My name is Dr. Peter Twesigye from the Power Features Lab. The Power Features Lab is a center of excellence based at the University of Cape Town, the Graduate School of Business. And welcome to this webinar. With me today, a couple of panelists that I will introduce to you later on, but we are glad to have you with us today. And we'll be using this webinar to actually understand or try to understand the changes that are happening in this Zambian electricity market. And there is growing interest in what's happening in Zambia. So the title for this session is going to be the Opening the Wires, and we have experts in this space that have helped in the design of this Zambian power market structure. So we'll get contributions from Mr. Elijah Sichone, who is the CEO or the Director General of the Electricity Regulatory Board from Zambia, ERB. We have a representative from ZESCO, Mr. Engineer Yoko Stari, who's the Director for Transmission System Operation and Trading. He will share insights from how ZESCO is actually managing the utility, but also how they are working with new power traders and performing their mandate within the open market structure that has been created in Zambia. And then we are privileged to also have with us Kathy Oxby, the co-founder and chief commercial officer from Africa Green Coal in Zambia, one of the largest and first pioneering power traders in the SAPP region and based in Zambia. We also have Mr. Hans-Erik Bridsen, who's from the CEO of Bridsen Consulting. Hans is a very experienced power market expert, and he's been instrumental in the design and development of the wholesale electricity market in South Africa, but also on the design of the competitive power market in Zambia and helping to set it up. And lastly, we'll have Mr. Skumbuzo Tsabeze, who is the CEO of the regulator in Eswatini. Mr. Skumbuzo brings vast experience in regulatory space, and he will bring insights from the peer review and learning network, which is a learning cohort of CEOs, 6 CEOs that come together annually to actually review each other's institutions and provide workable solutions on what they're learning from each other. Now, without delay, I would like to give a brief introduction to Zambia's energy sector. So here are some brief statistics about the country, which is really has a population of about 20.7 million, with an installed capacity of 3,886 megawatts, with peak demand of 2,400 megawatts. And then available generation of about 1.57 megawatts. That's 1,570 megawatts. The country largely depends on hydro resources, but we're going to understand the implications of how this has affected its setup and how this has actually affected the business community environment, while on the other side, providing opportunities for investments. As a background, I would say that Zambia's power system entered 2024-25 under acute hydrology conditions, which really depressed power supply because of a prolonged drought. That's the hydrology stress and structural reforms that had not been implemented. So installed capacity, whereas remained high, the available capacity was reduced significantly, creating a deficit of about 1,381 megawatts. And this resulted in severe load shedding lasting about between 24 to 96 hours. Now, on the financial side, of course, with the reduced supply, which translated into reduced sales and reduced revenues, there was a financial destabilization of ZESCO, and ultimately this required the revision of tariffs. There was a setup of emergency electricity tariffs, and tariffs rose to 37% in 2023 under the multi-year tariff plan, and the emergency tariffs kicked in effective 1st November 2024, and they've increased by 40%, 40.7%, And this was mainly to address ZESCO's liquidity challenges constraints. However, there was a competing interest to retain lifeline tariffs to protect, of course, the indigent consumers. The cost of service that's been done really indicates a historic under recovery challenge within the sector, and this was compounded by exchange rate exposures to the country itself, creating a 70% kind of operating cost deficit within the entire energy sector. So the financial stabilization efforts have been undertaken from a macro level and at a utility level, helping to reduce IPP's arrears from a peaking of $1.8 billion in 2021 to about 307 million by the end of 2024. And in May 2025, there was a sovereign utility restructuring with India's Exim Bank that provided 335 million to ease servicing. However, there's been significant receivables from some of the consumers that feed and get supply from ZESCO. Amidst all these challenges, there's been a major pivot shift in motion where the country made a decision to actually open its wires. So there was electricity open access regulations dropped in 2024 with an open market guidelines dropped in 2025, which aimed to move Zambia from a single buyer market model to a market model with the ring-fenced market operator located within ZESCO itself as a system operator. And there's the creation of a system public service trader within ZESCO to conduct business for the low-income consumers. And then there are thresholds that have been set up to allow eligible consumers and eligible contestable customers to transact bilaterally via the market, the new market that's been created, but also to enable transactions that happen or increase transactions within SAPP. Now, we need to understand the phasing and how these eligibility criteria thresholds have been set up to protect the system, but also ensure that there is a retail tariff stability that benefits all consumers. So to support this non-discriminatory access, the weighting, transmission, and distribution pricing methodology that was proposed, and this incorporates unbundled charges relating to connection costs, losses, network, service, reliability, balancing, and then deep connection charges that signal efficient siting, and largely using a postage stamp kind of network criteria for ensure equity and cost recovery, plus a lot of transaction arrangements which help to open up more space. Now, in all this, we're seeing that despite the challenges that ZESCO and Zambia are going through, there's been some positives that have emerged out of this. So there have been bankable private deals that were created in Zambia, including the 100 megawatt Chisamba solar power plant, and we're privileged that we have Kathy to tell us how they were able to close out this deal that really opens space and becomes a pioneer that can be modeled in other countries facing similar challenges or hydro dependent. And this is in a way reflecting on how commercial debt and innovative power trading arrangements can work within the continent, not only in one country, but opportunities for other countries to learn from. Now, all this has been done in a way that started with the provision from the cabinet. That cabinet approved a new market structure in 2024 that created the separation of the system operator and the establishment of an ISMO function. There's also been focus on renewable energy integration, the creation of an integrated resource plan in 2024. The electricity new net metering regulations of 2024 have been put in place, and these also are complemented by the multi-year tariff framework. So in summary, this is the kind of structure that's been put in place in ZESCO, in Zambia. It's a little bit, appears complex, but quite easy to understand. But this provides an opening from a single buyer model that allows now to have multiple generators and IPPs, as well as intermediary power traders and embedded producers to produce and feed power into the market through a centralized kind of bilateral trading arrangements, also a SAPP gateway but also allowing the public service trader created and ring-fenced within the system operator or the independent system operator that enables flows within the regional markets, but also within country to commercial and intermediary commercial retailers, and also other contestable consumers. We'll have Hans sharing insights about this. And this was enabled by, of course, the legal separation of the system operator through cabinet approvals, meaning that the market has to have, the system operator has to have a board and management staff recruited to commence. And you have an introduction of the market operators and granted a license by the regulator, the ERB, and it's going to be co-located within the system operator and named officially as the ISMO, the independent system and market operator. And then the introduction of a public service trader I mentioned, ring-fenced within ZESCO, and then there will be introduction of eligible sellers and contestable customers. This graphic of the Chisamba solar projects done meticulously by the complemented efforts between Africa Green Co. Chisamba and ZESCO itself and other partners. And lastly is the assessment of how regulation or a strong regulatory framework can enable all these to come together. So there is an exercise of CEOs who reviewed the entire electricity sector in Zambia in June this year. And we will get one of the representatives of the CEOs to actually share experiences on what they experienced. Now, with that, I'll actually stop sharing my screen now and invite one of our panelists to come in here. Mr. Elijah Sichone, if you're around, please. Mr. Elijah? I understand.
Yes, I am around, yes. Peter, and thank you, and good day to all the participants.
Good day, Mr. Elijah. So thank you. You're the regulator, the CEO, the institution responsible for setting the rules of the game. And you've seen the evolution of the power market. My first question to you is going to be kind of tariff related. Looking at the 2024 emergency tariffs that were put in place, how should the ERB operationalize this multi-year tariff plan, ensuring that it provides cost of service kind of cost reflective tariffs to the industry while protecting lifeline consumers? And what adjustment mechanism actually do you think works to mitigate inflationary pressures?
Thank you very much, Peter. And again, thank you for the opportunity of peer reviewing the Zambian regulatory environment. I would also like to thank the participating CEOs that basically made time to be able to be with us in Zambia. Indeed, the country, I think as you sketched, is in quite some challenging position, and one of which definitely has to do with the tariffs that are currently prevailing. So maybe just to give a bit of context, we do have right now, we are under what we call emergency tariffs. These were introduced in 2024. Basically designed to ensure that the utility has additional revenue during the power deficit that we are facing, whilst at the same time maintaining progress towards cost-reflective tariffs.
Sorry, Mr. Elijah, is it possible to turn on your camera so everyone can see who the regulator is? Please continue.
Thank you. Just in case people think it's AI.
Yeah.
Thank you, Doc.
Yeah.
Yes, I was just basically saying that we do have a challenging situation in terms of tariffs right now, given the prevailing challenges that we're having in terms of the power deficit, and to try and ensure that ZESCO has additional revenue with which to import power from the region. we basically introduced the emergency tariffs in 2024. So these tariffs were just intended to ensure that additional revenue is generated. And in July of 2025, when these emergency tariffs were extended for an additional 3 months, this is up to 31st of this month, ZESCO was also directed to basically develop and propose a sustainable tariff framework that considers both the ongoing power deficit and the long-term multi-year tariff plan that was put in place in 2023. So just this week, ZESCO is basically expected to present to the ERB a set of proposed tariffs aimed at establishing a more stable and sustainable tariff structure. We think that this will enhance predictability for investors in the electricity supply industry and other key stakeholders. So what basically this is intended to be a hybrid of the current emergency tariffs and also the tariffs that were approved as a multi-year price path beginning from 2023 to 2027. In 2023, we did make an adjustment. In 2024, we made an adjustment, but 2025, this is when we're now trying to find a way of how we ensure that we bridge the two, tariffs that are supposed to be in place, being the emergency as well as the multi-year. But what happens is that because of the kind of environment we're in economically in terms of addressing inflation and also the exchange rate, we also do what we call true-ups, and we've also established a regulatory clearing account for that purpose, so that at any point in time when we are considering the tariffs, we ensure that we restate all the elements that would ensure that cost reflectivity is attained. And we are also mindful that we do have the low-income people of our society. So we've also made sure that there is a lifeline available to all, lifeline tariff available to all customers. And that is basically caters for the first 100 units of power that is purchased every month. Now, the team, when they did the review, I think an observation was made to the fact that the tariffs are not targeted. The lifeline tariff is not targeted, and therefore we directed ZESCO at a time when we approved the extension of the emergency tariff that a study should be undertaken aimed at only ensuring that the lifeline tariffs only benefit the low-income households. To that effect, ZESCO has submitted a policy paper which outlines the proposals that can be considered to refine the lifeline tariff so that it is exclusively meant to benefit those of our low-income or indigent customers. So I think typical of any other regulator, we do have these measures that try to restate the cost reflectivity, but given the situation, hence the move to basically bridge the two emergency and multi-year tariffs so that we continue moving on as a country. I think, moderator, this is what I would say for now in terms of ensuring that we still remain on the multi-year tariff path, but at the same time, we deal with the emergency situation that is currently subsisting in our country. I thank you, sir.
Thank you so much, Engineer Elijah. I will come back to you to discuss wheeling arrangements and possibly concerns around wheeling cost allocations later on. But at this point now, I would like to switch to Hans. Hans, you've been very instrumental in the design of the South African wholesale electricity market, but also in the design of the Zambian competitive market, which we call the multi-market kind of model, creating open access and moving away from a single buyer model. Could you briefly tell us take us through the key mechanics of this design and how it will function, please. Thank you.
Yes, thank you, Peter, and hello to everybody from a bit colder Nordics at the moment. But I'll try to again using the same slide as you showed earlier, Peter, on the open access to try to illustrate kind of the how the mechanics of the open access market would look like and work. So as you say, kind of one of the bases of the design, and I think you also alluded a bit to that, and we'll get back to Elijah on this. But again, the setup of the system operator. So as you can see I'll put on my laser pointer, the system operator and the independence of this is, let's say, one of the backbones of this to ensure that there can be a consistent transmission pricing or wheeling framework, allowing for trades to happen, let's say, transparently and indifferently between the different operators of the transmission system. So as a backbone, even though it's not, let's say, directly a part of the market itself, it's an extremely important part of the market that we have now a transmission pricing regime that is common for all. And as you said, kind of the market is essentially divided into two main parts, if I can call it that. So with the public service trader, as you mentioned, will be kind of managing to a large extent what you can call the regulated portion of the market. So again, supplying, so utilizing mainly the CESCO generating capacity combined with the IPPs that are under existing PPAs with CESCO to supply, let's say, the regulated tariff, let's say, customers try to be depicted kind of in blue on the right side here under the contestable consumers. But then again, what is of course the open access itself is allowing eligible sellers to trade with the contestable consumers, either through bilateral contracts signed directly between the willing buyer, willing seller, essentially, that is going to be, let's say, captured through the market operator. And you can see that an indicator is that we've said that the market operator is you can see in brackets, let's say, because it won't be kind of operating a market per se. For the bilateral contracting, it will be more like a registry, at least from the outset. So again, capturing the values, not necessarily the commercial arrangement, but essentially the volumes and the, let's say, trading patterns on the bilateral contracts between the willing buyer, willing seller. What has been in place for a long time in Zambia is that several of the, let's say, bigger market players in Zambia is already active on the SAPP markets. And one of the, let's say, basic designs that we looked at when we did kind of the design and the structure initially was to say that instead of creating a very small Zambian market, we would rather allow or open for that. Again, the eligible seller, contestable consumers should utilize the existing SAPP markets for, let's say, the medium to short-term trades. So utilizing the four fiscal markets, day market and intraday market of SAPP to do the trades. But then as we moved along, we also then recognized kind of the issue where SAPP has a requirement of 5 megawatts of, let's say, available trading capacity to become a market participant, while the eligibility and contestability criteria of Zambia was 1 megawatt. So therefore, this SAPP gateway that you can see here in the middle was created essentially to cater for essentially that gap between the 1 and 5 megawatts. I think I'll come back to that a bit later, but one of the ongoing discussions at the moment is, of course, should this gateway be open to everybody, or should it be restricted, let's say, to the ones that cannot become a member of SAPP? Because the initial reason for establishing the gateway was a transitory kind of arrangement until, let's say, Zambia and SAPP had an alignment on market participation in the short-term markets of SAPP. So ideally, it should go away. But during the course of the ISMO project that is ongoing, it has been raised if the gateway should be more of a persistent or not a transitory arrangement, but essentially allowing for that gateway to be for anybody who wants to utilize that to trade on SAPP. So that is kind of an ongoing discussion. So I think maybe I'll stop there at this point. Yeah, Peter, I'm back to you.
Thank you, Hans, for that explanation. Maybe I could have a follow-on question to that, and basically this hinges on the phase 1 kind of essentials for setting up a credible and ring-fenced market operator. How will this actually ensure that there is market liquidity and contract registration, credit cover, settlement of calendars and metering, all these arrangements, how will they work, and how will bilateral trades and SAPP participation be recorded and reconciled?
Yeah, but again, this has essentially been so. There has been a lot of work going into this kind of lately, essentially under the framework of setting up the ISMO. Because again, the design. So again, I'll try to show kind of the market operate unit. So first of all, as you also said in your introduction, is that the market operator will not be a separate entity. It will be implemented, at least from the outset, under the, let's say, umbrella of the ISMO. So also in its name, and a unit under this. And the main reason for this, or kind of the guiding principle, as you can see in my footnote here, is that, again, the current law doesn't, let's say, recognize a market operator as an entity. Neither does the SI allow, let's say, or open for this. So that is why we have again called this a unit under the system operator. But you can see here, I will not go through all of this in detail. But again, the unit itself, and it has been, as many probably on the call is very much aware of, been developed what we call trading guidelines and market participant agreements, trying to detail out the operation and the function of this unit and how to make this, let's say, seen as a proper ring-fenced entity. And again, also answering to your question on, let's say, contracting, which has been again another one of the bigger discussions that is also to a certain extent still ongoing, is that, of course, the opening of the, let's say, open access market will not, let's say, cancel current bilateral agreements, so they will remain. And there is ongoing work kind of to create, let's say, a common framework on how, let's say, issues regarding how to manage those is going to be done under a common framework. But again, as the bilateral contracts is legal agreements between two parties, any changes to this, of course, will have to be managed by the contractual parties themselves based on this common framework. And again, kind of one of the key things for the market operator unit, again, following the market guidelines that was approved last year, we will then manage kind of the regulatory compliance under the unit by having also a market surveillance function as part of this to make sure that people are complying with the regulation and the guidelines that are governed by ERB. And if you see on the more practical thing is that, of course, it will need to onboard and register market participants. Again, act as this gateway to SAPP. So again, this is ongoing work on, again, the details on how this is going to be implemented. There will also be a requirement for a separate, let's say, lightweight, if I can call it, participant agreement, because again, as the market operator will act as a gateway, it will be exposed to the rules and regulations of SAPP, but the underlying kind of, let's say, or these kind of underlying rules and regulations needs to be imposed on the, let's say, real market participant that is utilizing the gateway. It would also then manage a database on the transactions. So again, this is not a big change of today because again, this is essentially done by ERB. But again, trying to have a central database of the trading. It will also facilitate, let's say, on behalf of the system operator, the nomination processes for bilateral trades. So because again, when the system operator is going to try to balance the system, it of course needs to know what is the expected kind of both generation and consumption under the bilateral trades. And again, more or less, so all the market participants that are currently part of SAPP, they will be continued to trade based on their own, let's say, trading strategy or how they would like to access SAPP. So nothing will change for CESCO as being allowed to continue to trade, as Greenco, as CEC, as Lucemfa, and the other members can continue to engage with SAPP. So I don't think if that answered your questions, Peter.
Yes, it does. Thank you so, Hans. Circle back to you a couple of times to actually make sure that we simplify some of these to people that are not as engaged with these market arrangements on a daily basis. But now, allow me to shift to Kathy Oxby. Kathy is the co-founder of Africa Greenco, and she's been very instrumental in setting Africa Greenco up in Africa, but also in how this power market works in Zambia. In fact, they have a large presence in Zambia. Kathy, from your experience really as a power trader and a major investor in this market, there could be some network risks that are exposed to relating to Zambia's market itself, but also within SAPP. How are you prepared to mitigate some of these, and what risk mitigation instruments do you have or have you designed to ensure the robust function of Africa Greenco?
Thanks, Peter, and hello, everybody. Pleasure to be here. Yes, I mean, you're obviously correct that at the moment we do sometimes experience some transmission constraints within the SAPP network. They, at the moment, generally lead to a market split, with the constrained portion being in the north, including Zambia. To address that, it's important and it's a key part of the Greenco business plan to ensure that we have sources and uses of power across the region. So Greenco is very much a regional aggregator model that's looking to build a balanced portfolio of different sources, different technologies, different geographies of generation, and customers also spread across the region. Added to that, we are looking to develop our own storage capabilities to be able to ensure that we don't end up with stranded power. And also we have arrangements with ZESCO and with ZETDC, working closely with them to find ways to enable them also to monetize the flexibility that they have in some of their assets, such as the large hydro, which also enables some time shifting, while arriving at a benefit to the utility in the system by, as I say, monetizing, valuing the flexibility that they're able to provide.
Thank you, Kathy. Me have a follow-on with that. So with this Chisamba deal, that's a very nice deal that you really closed recently. And could you briefly explain the key features of what made that project really viable? What do you think made it cut the deal?
Yeah, it's a fantastic deal, and obviously that power has come online at a time that's vital to Zambia in the current energy situation. The structure is unusual, and at Greenco we pride ourselves on being able to be creative and innovative to design transaction structures which achieve the goals on all sides, and the structure is also reliant on that close working relationship with ZESCO and Kariba North Bank Extension, being a subsidiary of ZESCO. It was also very important for the transaction that we ensured that the power remained in Zambia, given, as we say, the current power situation. In terms of the structure of the transaction, by us stepping in as the off-taker of the power for the first 13 years, we were able to profile the tariff in order to enable the bankability of the project with relatively short-term debt. Projects of this nature are normally financed with very long-term debt, but it was the preference of the project to have shorter-term debt that could be fully repaid within its term. And so therefore, we used our ingenuity and also leveraging our broader relationship with ZESCO, which enabled us to take more risk than some others may be able to, and get comfortable with a slightly unusual risk profile that helped to ensure the project is able to meet the debt service cover ratios embedded in their financing arrangements and close on that project, say, with that shorter term debt structure.
Thank you, Kathy. I'll come back to you. Let me switch back to a related question now posed to ZESCO, because they are your off-take and counterparty to this arrangement. Mr. Sitali Dioko, if you could turn on your camera. The first question to you is: you have got all these power traders and investors keen to invest in Zambia, and there's been you've had issues with the utilities creditworthiness owing to the drought season that affected your generation capacity and supply, and of course some areas that you had in here. What further steps has ZESCO put in place to ensure that there is a mechanism to strengthen its standing as a buyer and trader in an open market? Mr. Study? Mr. Lioko, are you probably muted? Or okay, maybe I need to now, as we try to get Mr. Lioko to come and join in here. Let me switch back to Kathy Oxby, please. Coming back to the Chisamba deals, really, what other deals or what other projects are you looking to actually start in Zambia, and why Zambia? What makes Zambia unique? And are you getting kind of sovereign guarantees? Is the state willing to give you sovereign guarantees? There are standard PPAs that you probably make that your transaction is very easy that you have not observed in other markets?
So to answer that one first, absolutely not. No sovereign guarantees. I mean, it's a cornerstone of the Greenco business model, that we're looking at the fundamentals of the projects. The huge power demand that is residing in the large commercial industrial customer base, they are willing and able to pay. We shouldn't require the state to be providing guarantees for power offtake. That is one of the key advantages of moving away from the single buyer model that many countries still have, where all of the power has to flow through the utility, which can cause a bottleneck and create these credit risks. So through our structure, where we're the direct off-taker for the project, and then we're selling directly to our customers, there's really no need for those sovereign guarantees. And we simply can't achieve the scale of new generation required across the region if we're dependent on those. The IMF debt sustainability caps simply won't allow it. It won't allow the states to be incurring those contingent liabilities. So we have a very large pipeline of new generation, both within Zambia and beyond, none of which require sovereign guarantees. The bankability stems from a combination of our balance sheet and our ability to access a broader customer base through our membership of the Southern African Power Pool and the fact that we're licensed in multiple countries in the region. So we're able to diversify and mitigate our risk, which in turn makes us a stronger, more robust counterparty for the projects that we're buying the power from. Drawing on the Chisamba project, I mentioned that we're ensuring all of that power remains in Zambia, but the customers aren't looking for a solar profile. And so that is also a key role of traders such as Greenco, is to take different sources of generation and use the markets to blend power and reprofile it. So we're committed long-term to supply our customers with a baseload power profile that meets the needs of their businesses. And so really that flexibility is what is key. And you asked why Zambia? Zambia, given its land-linked location, made perfect sense for us from the perspective of the regional aspect, and also the willingness of ZESCO and the ministries and the ERB, when we were still at the early stages, to engage in what was then a pretty unusual concept of a power trader for the region. I think Zambia is very much leading the way in terms of the open access framework and ensuring that a well-structured and transparent market framework is in place for multiplayer transactions. We have been deeply involved in the discussions around the ISMO, as Hans was speaking to earlier, and would commend all the work that's been done. But we're looking forward to getting to a place where we do have that full transparency and a level playing field. We're currently able to wheel under the bilateral arrangements that we have in place with ZESCO that we've had for a number of years. But ultimately, before too long, we should get to a point where there are regulated use of system charges applicable to everyone, the same, so everyone is playing on a level playing field. And the same comes to the other aspects of the system charges, such as balancing energy costs. We need everyone to be subject to the same rules so that we can compete fairly and derive the most efficient use of the power available, and ensure fair and open competition.
Thank you so much, Kathy. I will come back to you to check whether this model you think is replicable in other countries within the region. And now allow me to switch to Mr. Skumbuzo Tabeze. So Skumbuzo is the CEO of the Swatini Regulator and had the privilege of reviewing the Zambia electricity industry in June. So based on the week-long interactions that you had in Zambia, could you, Mr. Skumbuzo, turn on your camera and give us some insights from the peer review experience and what kind of evidence-based interventions you think can work to improve the investment climate in Zambia? Sorry, you're muted, Mr. Skumbuzo.
Oh, there you are. Thank you, Peter, and good morning, everyone in the panel, as well as those listening. Indeed, I think it was an absolute privilege, honestly, to go to Zambia, particularly at the time where the industry is, specifically the country, is going through a massive transition and challenges. I think it's often very difficult to invite a cohort of 6 CEOs to come and do a complete and holistic review of a country when it is going through its own challenges. I think perhaps for the benefit of those who may not be aware, I think this cohort comprises of 6 CEOs from Cameroon, Egypt, Zambia, Mozambique, Eswatini, and Zimbabwe. And the first stop was actually Zambia. And we were surprisingly pleased and to have met all the stakeholders, I think, from the topmost politicians right down to the SMEs who are involved directly in the sector. And we would really, really like to applaud the ERB for ensuring that all the key stakeholders were actually involved, and more so in that I think this visit was done behind the backs, so to speak. I think, in other words, ERB was very vulnerable to the evaluation or assessment, so to speak. Really, it's just a peer review, so that I think the participants could actually speak freely and openly, so that ERB could be assisted in the role they do, and the industry at large, as a matter of fact, could be assisted. And indeed, I think we picked a number of elements, I think, Peter, I think that were quite interesting, and also very good lessons, particularly at the time of transition. I think it was very interesting to learn specifically from certain types of sectors. The first, in that Zambia was relying, 85% of the power was actually generated by hydro. I think no one would have imagined that you would run 2 years without rains coming through. I think that's the first thing that perhaps we can take for granted now, but I think there were lessons learned. And but more importantly, I think what we picked up was the political will and desire. Kathy has actually touched on that, in that I think the government of Zambia deliberately took the bull by its horns to say, look, I think we're facing a challenge. What can we do to sort of change the sector? And it all starts with the political will, desire, and commitment to get to a stage where open access takes primary stage in a country. And commendable as well is the fact that the utility, like you are saying, Kathy, to get the regulator, government, and the utility together to transition simultaneously and agree that this is the way forward was quite enterprising. Having said that, I think we're also intrigued by the pace at which IPPs are actually settling in Zambia. I think 50% of the power is actually taken up by mines in Zambia, which brought to our attention that it is on a slightly different trajectory than some other countries. But quite frankly, industry does take up a significant load. And having picked up, I think, let me summarize it this way, Peter, and say what lessons, what scorecard, and what interventions were there. I think in summary, we learned that the readiness of the electricity network in supporting open access is very important. I think whilst these policies are actually being done, it is also important that the network has the capability to deliver. And obviously, I think we picked up the constraints that Kathy would have touched on, particularly on the northern side of Zambia, between DRC and Zambia, and those constraints on the transmission lines. I think the issue which was raised related to both the quality of supply on those power lines. I think what obviously became a big issue as well, I think in terms of the interventions that were required was fast-tracking the interconnector between obviously Tanzania and Zambia. I think Kathy said it's a land-linked country, so that the benefit could actually be utilized between the two countries. I think a gap that still needs to be pursued, and we believe it is being pursued, is the finalization of the system operator guidelines, or the ISMO transparency, as Kathy would have put it. I think it becomes very important. One of the things that actually came up, I think I quote the mining sector, they're basically saying that we are in the same industry, and one of the mines is we're getting, it's paying 26% less on tariffs than the utility. So again, that is a challenge that needs to be closed. I think obviously there are historical agreements that would presumably have been signed with those mines, and adjusting and aligning those tariffs. I think engineer, the CEO, also touched on that tariffs are still an issue, and particularly in dealing with the indigent. I think the whole spectrum of dealing with the tariffs and ensuring that the indigent, Elijah touched on that they actually, the tariff structure needs to be looked at, and but it's from both ends that I really want to emphasize, because he touched on the low end to ensure that the indigent equally benefit. So the tariff actually addresses, the social tariff actually addresses those who need it, but does not benefit those who actually can afford higher tariffs. But similarly, I think if you look at industry and the issues which were raised by the mines, some of them touched that other mines have historical preferred tariffs, which was benefiting them up to 26%. Indeed, I think it becomes important that for an investment, the investment reform needs to continue to receive support from government. So government needs to assess if the regulations and the current policy framework does adequately create this enabling environment for investment. I think I'd like to end there for now, Peter.
Thank you, Mr. Skumbuzo. Just a quick follow-up on that. Is the structure of the independence of the regulator, because you cannot move from a single buyer model to try go to market open access without a strong regulator. What was your assessment of the commitment by the DG and his team in strengthening the independence of the regulator to facilitate this to happen? Probably the countries that would need to draw insights from that.
Yeah, indeed. I think it was very, very interesting. I think, I'm careful how I say this, that it actually represents the true observations of the team. I think the beauty of being a regulator coming from outside, you are able to speak directly to the politicians and evaluate whether politicians are actually able and willing to allow the regulator to operate independently. I'm often careful that we use the word independent and autonomy somewhat interchangeably, because the general view is that politicians tend to think that the independence of the regulator suggests that they will work and not be curtailed, and they will work and be unconstrained. Yet, I think you're quite right. I think the independence is as it relates to them making decisions, and those decisions to advise and inform government correctly. I think first and foremost, I think to answer the question directly, yes, the sense we received was that the current administration in Zambia, to be honest, I think we're pleasantly surprised that they were willing to work with an arm's length from the regulator and allow its independence. And I think even in evaluating the impact and effectiveness by the stakeholders of ERB, we actually established that a certain high level of independence was being allowed with the regulator, and we can only encourage that the spirit continues and it continues to be sustained for that country to pass through the woods and meet the expectations of stakeholders. So in short, yes, I think we established by and large that the regulator was operating somewhat independently, and there was a desire to stay away or steer away from interfering or intervening unnecessarily with the operations of the regulator. And fortunately, again, the provisions of the Act seem to protect the regulator from such direct political interventions or interferences. And I must say it works well for government, because that way, then you get advised correctly as a government. Thanks, Peter.
Thank you so much, Mr. Skhumbuzo. I will now switch back to Hans. Hans, I think with this new market change, it's always important to actually give assurances to investors or give a clear understanding on how they will recover their revenues and how any trades arrangements guarantee full financial stability for their respective businesses. So in terms of the sequencing of this market structure that's proposed in Zambia, how do you see, how should it be prioritized so that there's not fighting too much at the same time, that in a case that would deter investment incentives, but also on how would it ensure there is equitable balancing of recovery of costs or trade that would be bankable? So.
Yeah, well, thank you for that question. I think actually maybe refer a bit back to what Kathy said on how they are thinking from their perspective. By essentially when you look at the market or the open access, let's say law, regulation, and market is focused a lot on that. Market participants will have access to both trading, let's say nationally, either through bilateral contracting or by utilizing the SAPP short-term market, let's say markets for also for their internal trading. At the same time, then having access to a larger market of Southern Africa. So in that sense, the sequencing is more on not on the markets, because we are essentially kind of building on what has already been in place in Zambia for some time. So again, the open access itself, and then essentially allowing market participants to trade on SAPP, which many have already been doing, and then slowly over time, let's say gently pushing people into trading kind of based on the open access and not kind of based on the regulated tariff. But again, having said that, I think especially on the definition of the eligibility and contestability criteria, as those who have seen the proposal, is that it's going to be a stepwise or phased kind of market opening, and again, of course, guided by ERB. So again, the regulator will have a crucial role in managing essentially the issues that they are raising now. That kind of how do we do this in a timely manner, not too fast and not too slow, making sure that we bring the benefits that is expected of the open access, but at the same time we are not going to endanger, let's say, if I can call it that, the national, let's say, consumers as well as the national generators in the process of opening the market. So again, building on what is already there, creating kind of a more open and transparent framework for this, and then again opening and, let's say, gently, if I can call it, pushing people to join the market over time under regulatory oversight is kind of the way forward, which I also think is a very, again, having been part of a lot of these market reforms over the years in many parts of the world, I think this is a very sensible way of doing it, kind of allowing and opening this to market participants, but then again, also slowly trying to make them to move, let's say, voluntarily into utilizing this, because it's a benefit for both the buyers and sellers to have that flexibility.
Thank you, Hans. I think now we should take a couple of questions from the audience. And there is one here from Tina's Painter in the chat. And if I may start with Tina's question is, and I think this is directed to you, Hans and Kathy, and he wants to know whether SAPP participants will be obliged to report market results, successful trade volumes to the system operator in a timeliness manner.
Yeah, and as I actually answered that also online. So this will be all, let's say, on the market rates, they are automatically reported to the system operators to now it's very detailed on SAPP, but their balance responsible report that is generated by SAPP will that is sent out automatically from the trading platform of SAPP to all the system operators. So there they will see again, CESCO traded X amount, Greenco traded another amount, CEC traded a different amount. So that report will come to the system operators. And likewise on bilateral contracts, if you have any of those kind of regionally, they also need to be, let's say, reported now under open access. That contract needs to be registered with the ISMO and captured there. And it's of course also a requirement from SAPP to get nominations of cross-border bilateral contracts, let's say, in advance of the markets.
Okay, thank you for that, Hans. Anyone would like to pose a question? Please put up your hand and pose your questions to the panelists, please. Hawa, Rosa, if you could let me know, because I don't have full sight of all the participants from my side.
There's currently no one raising their hands, Peter.
Okay, thank you. Okay, there is a hand from Penny.
Penny.
Yes.
Okay.
Penny, go ahead, please. I think she's muted. You need to unmute her. How could you unmute Penny, please? Okay.
Yeah, I'm unmuted. Thank you, Peter. Yeah, thank you very much. And thanks for this very interesting discussion, which I think probably needs more than an hour and a half. I've got lots of questions.
Yeah.
Yes, so I've put my questions in the chat, but maybe I can talk through them.
Yes, please.
And my first one being how, and you, Peter, you referred to ZESCO addressing its business, so strengthening its business so it can be a credit-worthy buyer. And as you know, Peter, you're from UCT here in Cape Town, and there's a lot of discussion, especially in South Africa, concerns on Eskom's viability going forward, especially with regard to new incumbents entering the market and really capturing, if I can use that word, the most viable and creditworthy customers. And I feel at this stage there's not enough discussion on whether utilities are going to be viable in the long term. And I'm specifically concerned about this because there are huge implications if the utilities aren't viable. You know, there's a lot of stuff that's got to go back. There's people involved. I mean, we've seen in the just transition in South Africa how it hasn't been planned for adequately. So that is, for me, a real concern. I think even noting Kathy's comment on, you know, trying to kind of aggregate full products. So in other words, not just the intermittent solar or, and sorry for using intermittent because it is, intermittent solar or wind, how one develops or puts together a marketplace that recognizes the intermittency and the balance between an entity that's got to essentially be a provider of last resort. So I know I'm asking a few questions there. That's the one thing, and then with specific reference to the market, I'd be eager to hear from Hans how settlement in the market is going to work. So there again, coming back to South Africa, concerns that, you know, gas is going to be used as the marginal price for settlement for everybody else, you know, even if it's renewables. Is this going to be something that's going to be put into place in Zambia as well, you know, either in the transitory market or changes to SAPP and how SAPP might work in the future? Because we've seen, and I've really got to, I'm not being helpful, but I want to raise this because I feel quite passionate about it. We've seen in Europe, and Hans has worked in Europe, that the electricity market is really suffering. And I'm going to take a quote out of the Draghi report from last year. That the energy prices, EU companies still face electricity prices that are 2 to 3 times higher than, for instance, in the US, and it's the same in the UK. Market rules prevent industries and households from capturing the full benefits of clean energy in their bills. High taxes and rents are captured by financial traders and are raising energy costs for the economy. And I don't think we're taking those lessons on board. Maybe I'm wrong, and I would love for Hans to give me some comfort that we're not going down the Europe and the UK model. So this for me is really, really important. And I would also like to understand in this conversation, you talk about indigent consumers, and I absolutely agree they've got to be looked at. But non-indigent consumers are just as pressed in these financial times. So I don't think it's right to just highlight non-indigent, because once you've done that, I can tell you right now, the next lot of people that are going to be jumping around, and it's happening in South Africa, is, but what about us? So that for me is really important. And I'm not sure whether we're doing this. And I'd love to know whether Zambia has a model where it said, okay, how much is this all going to cost? And I'm not saying there's other alternatives, but I think the communication in terms of cost of energy supply is really not being communicated. And maybe Zambia is different because there's hydro, but I mean, there's a huge part of a new build on coal as well. And then I just also wanted to finally ask another question. I've posted others, but my question I haven't posted yet. As we go down a process of discovery of the risks, because we've seen that discovery process in Europe and UK and elsewhere, even in Denmark and Norway, that wants to kind of de-link from the market. Who is taking the risks as we discover the flaws, and there are going to be flaws, and there are clearly flaws, how those flaws are going to be taken up? Are the incumbents with their profit-making models also willing to take some of the risks of structures that we're putting in place and then bring their contribution to addressing it? I'm a bit concerned that we seem to think that, well, we're going to use the legal framework of a change in law, and then all changes in law will be captured it will have to be taken on by government. So it's a lot of questions, but I think there's a lot for me. There's a lot outstanding in this conversation, and and I'm raising it because it touches me as a consumer. It touches everybody as consumers. Thank you.
Thank you, Kathy, for those questions. Very interesting and intriguing questions, which are really very pertinent to this conversation and have somehow interlinked between what's happening in South Africa and what's happening in Europe and Zambia. I'll let Hans first jump in to talk about the aspects around the intermittency, and then talk about the settlement mechanism within the market design, whether it's pegged to marginal pricing or not, and the risks of discovery prices, and whether the incumbents actually have some balanced kind of responsibility to provide a liquid and functional market.
Yeah, that was a big bag of questions that maybe we need to have have a couple of more hours to discuss. But I think maybe let's start with the simple one. So again, in Zambia, so essentially what is proposed in Zambia is a market concept where you so first of all there will be a regulated portion that will be let's say governed by ERB to set a regulated tariff based on the cost of service study and the multi-year tariff application like today. So there is one portion that will be covered by this. And for the, let's say, if I can call it the free market, or for somebody who wants to be in the market, they have essentially the two options or two kind of generic options of either doing bilateral trades, either within Zambia or kind of through SAPP if they are a SAPP member and can get access to transmission to do bilateral contracting, or then to utilize the various markets of SAPP, which is a combination of marginal pricing, as you would know, and let's say pay as bid in intraday. So I think there is no big changes in a sense on that. And then talking about Europe, so sitting now in the northern part of Europe, and again I think one of the issues that we face in Europe is valuing both flexibility and intermittency, which is because everybody would like to say, oh, I would like to have that clean, cheap power, please. But I'm not willing to pay for the flexibility provided by the system operator or by let's say market participants or entities that can provide that flexibility to balance the system. So for sure, kind of, we are spending a lot of time in Europe discussing what is called or loosely referred to kind of a market design version 2, because again, let's say the current market design is mainly focused on kind of the old, if I can call it the old system, the old more traditional system, and that there will be, and there's a huge move, for instance, in Europe to move towards local flexibility markets and getting access to local flexibility, but also then allowing us as end consumers to take more control over our own, let's say, both generation and consumption. So there is a big move of that in Europe, and we can have a long discussion on the benefits that for instance I can see kind of from my home with my EV and my let's say smart house applications to manage this better myself. So again, I know what the Draghi report said, and not all of that is maybe as consistent as it should be. But I think that is kind of my kind of 2 cents on this. But again, I think the key here now with renewables, and again I think Kathy explained it very well in explaining kind of when you have a solar. Kind of, you are buying power as a trader from a solar generator, but you are expected to provide, let's say, base load, and that doesn't match if you are not allowed to mix, let's say, your portfolio with different assets. And we see a lot of these things happening kind of in markets around in Europe, that there are moves towards kind of doing trades like this. So yeah, maybe that is my 2 cents before I leave it to somebody else to answer as well.
Hi, Peter, your mic is...
Sorry, Hans, thanks for that. I think the other question that Penny had was whether utilities will be viable in the long term. Is that consideration? And
yeah, but again, kind of as Penny, I think you are also very engaged in South Africa, and kind of the what is very often referred to as the utility debt spiral, kind of when the utility is asked to be the backbone of everybody and the overall system, and essentially people leaving, let's say, that system to, let's say, cater for themselves, if I can call it or say it like that. And it is kind of a concern in a sense, right? That is kind of the model that we are operating under now. Is that suitable for a future where you have a lot more decentralized generation, and again, people and end consumers are managing kind of their own, let's say, both generation and consumption in a different way than they did before. So I think there is no clear answer to that. I think the key is that we need to be open, we need to be agile, we need to be ready for changing and adapting to this new reality, which includes the utilities, right? So we have seen kind of some utilities are better than others to do this, but I think that is kind of the long and short answer of this, that we need to be open to change the way that utilities operate under a new kind of, let's say, new world of consumers and generators. Yeah.
Thank you, Hans. Thank you so much for that. Kathy, see you, you're back. And what's your take about that? You're the trader, you're seeing the potential in that the markets provide when they're opened up, seeing utilities as you need them to be credible and bankable for off-takers. What's your take about those questions?
Yeah, thank you. And I mean, absolutely, it's key to the entire energy ecosystem that the utilities are creditworthy. It's in all of our interests to ensure that they are fairly and adequately remunerated for the services they provide and the assets that they hold. So, I think the move towards open access, as Zambia is doing, as South Africa is moving towards with the South African wholesale electricity market, is also intended to ensure that the utilities are protected. We need cost-reflective use of system charges that are fully unbundled to ensure that the utilities, in their role as transmission system operators, network operators, are able to fully recover the costs of building, operating, maintaining that network. We need to have balancing energy structures, which the open access regulations will introduce in Zambia and SAWEM introduces in South Africa. I think the other comment was made around the profile of solar. What we don't want is a situation where your large commercial industrial customers can buy cheap solar and then lean on the system in non-solar hours and not pay a premium for that. So they're benefiting from cheap power and effectively being subsidized by the system that has to hold the reserves at the same scale to deal with the same evening peak where solar doesn't help. And so the move to a market in which the price of power is transparently and accurately reflected through a competitive price discovery mechanism of a market ensures that the price of power in, for example, non-solar hours reflects that it's more expensive to generate, and therefore becomes a cost driver and an investment driver in technologies that can be used and can generate in different hours. And I think the other important point to note is, when we're looking at different customer categories, when we're talking about market pricing and arriving at a market price, that doesn't mean that that's automatically the price that flows through to the end consumer. There are still policy decisions to be made around subsidies and how you ensure that those least able are able to afford that supply. But that doesn't need to distort the market. You can arrive at a market price and then adjust that through policy decisions and other pricing structures. So I don't see the move to a market as being at all detrimental to any particular customer group. That's a slightly separate matter. So I think we also see that in South Africa you have the negotiated pricing agreements where actually some of the largest customers are getting the cheapest power, and that's in Zambia now. With the shift to some of the largest consumers, including the mines, being supplied privately, that is reducing some of the burden on ZESCO to supply power to them, substituting that power. And that power that they're buying is fully cost reflective, non-subsidized. It's being provided in arm's length commercial terms by the private sector. So you're avoiding that cost distortion at the other end of the market. Absolutely, markets evolve, and Hans, you've often said that looking at the Nordics, the market has evolved more in the last 10 years than it did in its first 10 years. So building in those mechanisms for change and recognizing that there will be an evolution is absolutely key, and that is built into both the structure of SAWEM, South Africa, and the structure of the open access market, to have a process for in a transparent and participatory manner, considering modifications to the framework. I think it is key that it is done in a coordinated fashion, both at the launch and later on. In Zambia at the moment, we know that the Electricity Act and the Energy Regulation Act are also under review, and hopefully those revisions will provide some additional clarity. What we need to ensure is that those, they're the foundations, and we need to ensure that any revisions there flow through into the other market documents. At the moment, there are inconsistencies between the grid code, the market guidelines, the acts, the open access docs, which will just lead to market confusion. So I do think that while we want to do it quickly, we also need to do it coherently and comprehensively, and ensure that we don't have we don't create uncertainty by rushing. We need to ensure that the building blocks on those firm foundations are clear and well aligned.
Thank you, Kathy, so much for the elaborations and explanations to give comfort to both the utilities and the other traders in the market. I am sorry, we're running a bit out of time, and at this point I'd like to circle back to Mr. Elijah Sichone, the regulator. Elijah, if you could turn on your camera again. We're going to do a wrap-up shortly, but I think it would be good to applaud Mr. Elijah for steering the sector in a period that is really hectic and challenging to navigate. But Mr. Elijah, what closing remarks or takeaways would you give the regulator if you're to give assurances to investors and anyone willing to set up a power trading company participating in the Zambia sector?
Thank you very much. I think I will not respond to the specifics raised by Penny, but just to say that yes, indeed, we admit that there are a number of outstanding issues that we need to deal with. And I think what we've basically opted to do is to learn by doing. I think that's the approach, and we open basically to hearing views from the stakeholders, the likes of Africa Green Co and others that are in this market and indeed experiencing on the ground what the situation is like. But also just to basically also express our sincere gratitude to the CEOs that peer reviewed, and I think through you for facilitating the peer reviews. We had very insightful discussions, and that the recommendations that arose from the peer review are assisting us to basically continue working on the market, and in particular the unbundling of the ISMO, the independent and system market operator. I think work is actually going on. We also got very candid views in terms of how we can also deal with issues around transmission constraints and enhance our trading, and also some of the standard documents that we need to have in place, such as the power purchase agreement, wheeling agreement, interconnection agreement, and connection agreements. So I think we got very useful insights from the CEOs. We are working on those recommendations, and just to also ensure or assure there would be investors, that the Zambian market is ready for business, and that all the work that is going on will take definitely into consideration the aspects that Kathy has talked about, ensuring that we have consistent documents, but ultimately we have documents that are not only responsive to the market, but they provide certainty for the investors. So we would like to thank those that are in the market, and we would also like to call upon those that would like to be part of this market, and indeed other stakeholders that may offer insights. We welcome those insights. We were also pleasantly surprised in the sense that the stakeholder views as captured by the peer review was such that I think it was maybe around 7 or 8 out of 10. But however, the recommendations that were provided by the peer review team in ensuring that we publicize or indeed reach out to the broader stakeholders in what we are doing, I think that will be taken on board. So I think all in all, Zambia is ready for you, and rest assured that when you come to the regulator, our processes are being streamlined, and we will be as responsive, and we undertake to ensure that our regulatory environment is evolving and responsive to the changing market. I thank you so much for this opportunity.
Thank you, Mr. Elijah, and we wish you well in Zambia. Going to Mr. Skumbuzo. Mr. Skumbuzo, any final takeaways from this webinar and the review that was conducted in Zambia in 1 minute that you would wish to share with the participants?
No, certainly. I think drawing from Kathy and Elijah, to be honest, the industry is evolving. Had we gone to Zambia at a different time, I am almost certain we're going to have a different outcome. So I think to the participants, I think what we can add is that perhaps in the final analysis, Peter, when we've gone through all the countries, it would be interesting to draw the collective lessons from whatever documents are going to come from there. So certainly, I think I have nothing more to add than that. But I think Elijah has captured everything correctly, and Kathy has highlighted how the industry is evolving and how agile and flexible regulators should be. Zambia has actually demonstrated that, and they should continue to go that route. Thank you.
Thank you so much, Mr. Skumbuzo. Hans, any last final takeaways and recommendations? Hans?
So sorry. No, nothing specific for me. I think these conversations are incredibly important to have, where we can share kind of views and have open discussions. So and again, kind of the open access market in Zambia will move ahead, and it's going to be interesting. As Kathy referred back to me on kind of the key is that we need to understand that this is not going to be a constant, let's say, path forward. Kind of we need to be adaptive, as I said, agile, to allow, let's say, the market to adapt to whatever changes that happens around us, because the world is not stable. Let's say there are a lot of changes happening around us.
Thank you, Hans. I agree that the energy landscape is changing pretty fast, and there's just only one way to adapt and try to modify to fit the country context. Kathy, any final remarks you would like to share in a minute, please? Kathy.
Thanks very much, Peter. I think not too much to add. I think it's been a very interesting, insightful conversation. Just to commend the work of the ERB and all of the stakeholders involved in the open access process. A huge amount's been done. I think there are a little bit of fine tuning before it can be launched, but looking forward to seeing that and seeing the impact and the benefits of having the clarity and transparency that will bring to the market, which I do see as being very much replicable for other countries in the region.
Thank you so much. There is one topic we didn't cover, which looks at access, and there is huge opportunity in Zambia for anyone interested in setting up business to promote access. I think there is the presidential initiatives that aims to unlock or set up mini grids and microgrids, provide 1,000 megawatts of capacity to electrify the entire country, with commitments to Mission 300, and of course about some PPAs that have been signed to actually promote energy access around the country through construction of extra renewable energy projects. And then, of course, recently ZESCO has, through a partnership and joint venture with Azana Electric Group, signed a $300 million agreement. It's a joint venture to actually promote access in Zambia, which is a good initiative, as trying to push access rates up. At this point, sorry, we've run out of time. I beg that we end it and wrap it up here. A special thanks to the panelists for your time. These are busy people. I appreciate that you made time to be here. I also would like to appreciate the attendees, everyone who's made time to be with us today on this webinar. Thank you for your time. We really appreciate your contributions. I'm really sorry for those that we didn't get time to respond to your questions or give you a chance to speak. I think one lesson is next time we'll try to schedule this webinar for a longer period than what we have done today. But I'm really grateful and thankful that you made time to join our webinar today. We'll make this webinar available on our Path Features Lab website for those that want to watch again. And please do reach out to us. I will be happy to provide clarity and explanations anytime. I thank you so much and have a lovely afternoon.
Well, thank you, Peter. Thank you, everyone.
Thank you. Thank you. Cheers and bye.
Thank you, everyone.
Thank you.